Hey, good morning.
Hello, how are you?
All right, good morning. Comment allez-vous? Jumbo, ni hao ma. Hola. Ciao. Good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of putting together trade plans for this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne McDonald. I'm a currency trader. Before that, I was a venture capitalist. Before that, I was a high-tech Silicon Valley entrepreneur. Before that, I worked in the nonprofit world. And before that, I don't know, I had a paper out. Worked at hockey games. Oh, for sure, eh? So anyways, that's me. How about you? What are you working on? Technical analysis, fundamental analysis, trader psychology? Well, I'll do my best to help. That is why I'm here. In fact, Traders Way values our community because they believe there's a chance that maybe I'll share some experience that I have with you and you become somewhat of a better trader. Maybe one that's a little more conservative, a little more disciplined, a little more focused on creating trade plans, but ultimately a trader that can find repeatable conservative trades so that you can grow your trading account over long periods of time by making good trades every single day. Therefore, they can provide a service to you and have an opportunity to earn income for providing that service. So it's in their best interest that you succeed. I want you to succeed. They want you to succeed. The thing is, do you want it bad enough? Okay. So anyways, that's cool. If you like that business model, they earned my loyalty and respect many years ago. Tradersway.com. Open up a demo account. Give them a shot. It's good for you, man. It's good for you. Okay, how is you doing? Hope everything's going well. Let's look at the calendar. What's going on today? Today is going to be the day. Another dumb prediction. And OPEC going on right now. I don't know if they've made any announcements. Sorry, I was out walking and meditating, doing all these things in the morning. So I'm not sure. But what I said yesterday was that they're probably going to do an increase in production because they want to lower the price of oil from about 90 back down to about 75. If you're wondering why, I've already told you. I've already gone through the game theory. I've already gone through the global business model. And I don't want to repeat myself. So you should already know that. The next thing is another dumb prediction that's coming out today. Often an okay scalping opportunity, but we'll see how it will apply to non-farm payrolls on Friday. Remember, that's a big thing. Okay? Cool, right? So another dumb prediction coming up, nowish. Nowish. Well, TA says OPEC Plus to recommend 400 barrels, but that's like, is that what they actually reported? I mean, dude, I've been told that from like 5 different, maybe 9 different sources. But what I'm more interested in is what OPEC actually does. So, but you're right. That's what is expected to happen. But that doesn't mean that's what's going to happen. But let me know if that's actual facts. Maybe they've actually sent out a press release already. I don't know. Ooh, that water's good, huh? Oh, for sure. Okay, so anyways, pay attention to that. Tomorrow's interesting, huh? Bank of England interest rate decision. European Central Bank interest rate decision. Australian monetary policy statement. Tomorrow's a huge day. And then, of course, Friday, NFP, baby. That is a valid headline. OPEC.org. Look at this. The OPEC month-over-month report provides a detailed analysis of the oil market developments, including oil supply and demand levels, and the trends in the world economy. And you don't read this? It's amazing, huh? People don't do it. Why? That's too hard to read that. All right. Reconfirm the production adjustment plan and the monthly production adjustment mechanism approved, and the decision to adjust upward the monthly by, 400,000. Okay. So that's probably already priced in. Cool. Yeah, people thought that they would have gone more than that. Reiterate the critical importance of adhering to full conformity. Doesn't that sound like a cartel? All right, so ADP coming up hot and fast. Let's start on Piggy. Okay. So the trade plan here, double bottom, higher high, higher low, gone. So I'm long somewhere in here. Up, some volatility, then we finally get in our new month, and then up, and then down, and then up, and then down, and then up, and down, and up, and holy schnicker, what a great week it's been. So you'll notice this line, and these are things left over from day trading group conversations about how to get yourself into a hot market. And the breach and the pullback was the general plan. It's hard to trade like this near big pivot points, right? It's hard to do it, and that's the whole discussion. And so what I was talking about is trap it, and then if it's going to reverse, it'll reverse, and then you'll know you need to be out. If it doesn't reverse, then you stay in. And one of the major themes of last night's conversation in the day trading group was, you're in a good trade, so you want to do everything you possibly can to stay in the trade and not freak out just because you're here. Remember, these are, numbers based on an algorithm that measures last month. Last month isn't necessarily this month, so they're important for sure. But I don't necessarily enter a trade just because it's a pivot. So why should I necessarily exit just because it's a pivot? But sometimes I still do, so it's hard to, right? Like an R2 is an R2. So anyway, so this is a tricky place. Now, if you're a bear and you sold this and it didn't work out, don't worry about it. Don't cry. Just dry your eyes, to quote Snoop Dogg. Okay? So that's fine, as long as you're not holding it now, right? And then, so bulls were able to stay in. Great. Cool. Okay, I think we were looking at it on this time frame. Yeah, so we had it trapped. I think you'll see something similar on other pairs, so let's just take a look at those. This one I doubled down on. This one has 100 pips locked in. This one now, how many pips is on the second trade? Oh, I can't see. 60, 70. About 80. So if I move this up now, oh, I guess that's only 100 pips. All right. So I can lock in. Okay, that's 150 pips. And I can move that. That's 50 pips. So I got 200 pips locked in. Cool. Cool. Nice. Nice. So let's back out though. Okay, here is a great example from last night. Let me see if I can click in. Yeah, it works. Okay, so one of the things we were talking about last night is how do you stay in a bullish trend when you're a bull, but you're worried about where places, like clearly a bear is going to think about selling there, right? It's clear. So you can see I marked a line here, and I marked a line here, although I don't quite remember why they're not here, but anyways. And what I said is you got to use these candles like a market open breakout type strategy. Okay. And yeah, White Rock was there, right? So White Rock can tell you what we said is let this break out above here, catch the pullback, and you're gone. Lovely, tell your mom. Now, of course, if it does this kind of stuff, that confirms what you thought. See, you think bears are going to take over here. It's very probable, but you don't know. You don't know. You don't want to quit, right? You don't want to not try most of the time, right? Okay? We fear to win, so we fail before we begin. So in this case, if the bear is going to take over, make them do it. Prove it. In this case, they didn't. I don't remember why I picked that line, though. Oh, that makes sense. So nonetheless, you fib this sucker and you got yourself a little 618 and off to the races. So that one I stayed in and golden. Take a look at our Aussie doggy. Aussie. This is a double bottom play, as you can see. There's a bottom there, and this is where I entered the trade. Cool. That was at, below 70, and we're at 71.50, so that's probably 180 pips. Cool. And then, once again, you see all the conversation here. If I clear this out, you can see it. Up, trap it, up, catch the pullback, okay? It's trapped again, and you keep this process going over and over and over again, right? Cool. Right, you see how you trap it there? You're like, Wayne, that's such a small trap. Yeah, but that's more than 12 hours. So, like, if you think about how this sets up, one of the things you could do is, if you're at the top of this range, you could put orders down here to buy. Okay, but whatever. Okay. So anyways, lots of conversation lately on trapping and trading breakouts. So, like, for example, you see this entry? Yeah. It's just based on this. Okay. You can see here, I've already marked it. Watch. No. See? So now we're getting close to the projected target. So again, we talked about this last night as well. And holy smokes, eh? This is going to be a problem. This is a bigger deal. This is a much bigger deal than where we were last night. So once we get there, man, okay. Once we get there, I think major decisions will need to be made for bulls. Kiwi. Okay, there's an entry there. What more can I say? Yep. Okay. I just got to mark it. This is a daily time frame. That's okay. And I got to watch that. That's the challenge. So this has maybe another 50 pips before I got to, put on shields up red alert mode. Here's a kitty cat. There's arrows all over the place pointing down. You're welcome. And so what has it been doing? Okay, right off the top, okay, this is the sell pivot. It's the idea. Okay, this is a daily sell, this is a daily sell, this is a daily sell. So daily pivots have been working very well. And here's tomorrow's sell. And we kind of call that a trend. What do you think? Isn't that nice? See, if there's too much going on here, let me clear some of this. Let me clear my throat. I'll leave that. I'll leave that. I'll delete this. I'll delete that. Okay. Delete that. Okay. See, if I go out to daily, you can see I've already planned this out for you. You're welcome, by the way. Okay, so now we go to a smaller time frame. Let's do hourly. You can see not only are we trending, but let me get rid of my price action pivot points. Okay, just the daily pivots here. Now, I have it also set up with price action. You can see I've trapped it here. So I've been teaching a lot about trapping. Okay. But nonetheless, if you just use the daily pivots, what do the daily pivots tell you? What are the basics? This is Monday's sell zone. This is Tuesday's sell zone. This is Wednesday's sell zone, which you knew yesterday, by the way. And this is tomorrow's sell zone. Isn't that nice? Down, 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 up, up. 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 Is that right? Yeah, I got to look that up. I never made that investment. Maybe I should. Maybe I'll take a look at that. Morning, Maida. Is that the one? It's like in San Mateo, California or something. Yeah, I wrote half of my book in that area of the world. High, low, and close. Divided by 3. Okay. Cool. So right now, this is still being measured out. We don't know the final zone because it's looking at the high of the day. It needs to know the low, and it needs to know the close because it's a weighted average. So again, another way of looking at these. So let me go to my indicator list and delete them. Okay, and instead let me add something based more on a standard deviation, which is a different math, but it's doing something very similar. What is it saying? Okay. It's saying, okay, this is between 1 and 2 standard deviations above the mean. Okay. This one is saying it's between 1 and 2 standard deviations above the mean. This one is saying between 1 and 2 standard deviations from the mean. So if you find yourself here tomorrow between 1 and 2 standard deviations from the mean, the only thing you really care about is that the mean, which is slope, is not equal, but less than 0. Okay, articulated dreams? So as long as m is less than 0, of course m is the mean, but we're not interested in the mean and one price. We're interested in the slope of the mean. That's slope. Come on, dude. Okay, we're interested in the slope of the mean. Now, that's what a statistician would say. What would a trader say? Well, what is the slope of the mean? It's the trend. Okay? So, interesting thing is if the rise over the run produces a negative number, aka less than 0, okay, less than 0 is equal to less than 0, then the trend is down. It doesn't rise above the run, it falls below the run. The run is your measurement this way. Run. Your rise is this way. So it's just a comparison of axes. Are you moving in this quartile, or are you in this quartile? So if the rise and the run is a negative number, aka if the rise is below, that's a negative number. Okay, if rise is above, that's a positive number, right? So you can just think of that. So if the slope is negative, well, dude, it's a bearish trade. So what could you say? Well, under current market conditions, which are bearish, statistically speaking, then the probability of it continuing down is greater than the probability of it reversing and going up. So under these market conditions, if price is somewhere between 1 and 2 standard deviations above the mean in a negative slope, then the probability is it will want to revert back. Oh, well, that's easy. Yeah, it could be. Now, the interesting thing is I told you to get ready for that to happen before it even was born. So that's the trickier part. But once you got that nailed, the rest should be fairly straightforward. Yeah. Cool. So if you guys are interested in taking a college level class, I would take Principles of Statistics. And what you'll find is there's a lot of stuff covered in that class that's applicable to currency trading. Well, trading of any kind if you're using technical analysis, because you must remember many, if not most, if not all of these tools that we use in technical analysis were created or borrowed from statistics. Okay, so anyways. Cool. So where are we going to be challenged? All right, got that there. I got that there. This is, okay. So these are little love notes that I'll leave for myself in the future. So far, what is it? What's the date today? The 2nd? Is that right? I'm up 3% this week. That's too hot. Too hot. All right. Yeah. That's too much. Ooh, 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 ooh. All right, so we're just here. So at some point, I think there's going to be a pullback. I don't know if it's this number or that number. But this is a 4-hour chart, and this goes back to a conversation I did with the day trading group. And this has to do with the stop loss placement. So if you had entered up high and up here, and you're like, why would you do that? It was a bullish trend. Yeah, well, it was also the most important selling pivot we have. And if you believe in seasonality, dollar was supposed to weaken, so this was supposed to go down anyways. I talked about it weeks in advance. So now that then you get here and you're at like the most important place for this pair to go down, and you expect this to weaken. So seasonality based, you think this is going down. Technically, that's the best price. And then at some point, you get this consolidation, lower low, lower high sell. So you could be like short somewhere in here, for example. If that's true, well, price is down here, so you're loving it. And parabolic stop and reversed is suggesting that this is where your stop loss is. Okay. Thank you, Milos. Huh? Doesn't that smell like inflation's going to come down? Smells like maybe the Fed is not going to raise 5 times. So anyways, okay, check that out. That's amazing, right? So we got to break this down into pieces because, again, I've been teaching about trapping. Okay. Now in this time frame, I don't have a 55 for some reason. But ignore the PSAR. What do you see? Right? Down, 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 up, up. There's that pivot. Okay. Down, 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 up, up, down, 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 up, up, down, 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 up, right? Up, up, down, 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 up, up, down, 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 up, up, down, 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 up, up, down, 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 down. So there's the little sort of trap in here is the continuation. So the reason I say trap is because there's 2 places that are typically good for selling, right? Use kind of a roll reversal area and then use the breakout. So let me really zoom in here now. Okay, this roll reversal area is the most ideal place to sell. Okay, you might have had it here, you could have had it here, whatever. Okay, maybe even up here, but that's late. This is for this trade. So this you kind of look across, or maybe you use Fibonacci. I honestly don't care. It doesn't matter. There isn't a right decision. If you're not ready to sell this, then you're not going to sell it anyways. You could do it with nothing on this chart. But nonetheless, you can see it's a 382. So there's nothing complicated about it at all, right? Okay, great. So this is the ideal place to sell. Sometimes you miss these. Why? I don't know. Your mom calls or something. Mom, I told you never call me at work. Okay, great. So the next one is this breakout. What I've been teaching the day trading group lately is, okay, that you can wait and trade it like a breakout. You trap it and you trade the breach. It's less ideal because your stop is still got to be above that. But what my message is, if you've done the research, you know the fundamentals, you know seasonality, you've planned this out, you got to get in the trade, huh? And you got to stay in the trade. So you're supposed to sell here, but you can sell there if you need to. Okay. You starting to get the idea? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 down. Do you want to sell now? No, you want to sell somewhere probably in this zone. Okay. Okay. Cool, right? What do you think? Is that okay? It's not okay. Perfecto. Okay, articulated. Maybe, oh yeah, I see the slider got moved a bit. That should help right there. Arve, have you been working with Ryan on market open? Because you'll notice the trapping is very similar, isn't it? Yeah. One thing we should probably pay attention to is that this current low for the Swedish crown is lower than this. You see? There will be a pullback, of course, but it's interesting. We got to get through this level, though. That's why I have this planned out for a big pullback at some point. But honestly, I mean, it should. You'll see price-wise. But what if it's not this week? What if it's next month? I don't know. But we're definitely on support right now. And as you can see, I have it all marked out. So it's been a good ride. So now, shields up, red alert. You got to be careful. What is high probability when you back test it? Okay. By the way, Norway is on the most important bullish pivot. So if there are bulls, they're going to show up. Okay. Also, if you are a swing trader, the methodology of swing trading that I teach is that you would sell this and you would exit here. That's a classic textbook swing trade. This here, a swing trader counter trades back to the central. Interesting. This swing, you buy it here and exit here. And then this O, you counter trade it, and then it resets, and then you take this down, which is kind of interesting. So now what's plausible is, you know, if bulls exist on this, they're going to want to take this north again. For how long? We don't know that. But nonetheless, if they exist, bears are probably going to take some profit here, which gives some vulnerability to the bearish move because there'll be less bears. So if a bull comes in, they could drive this back up. Maybe all the way back to 9. Oh, the trade example. Oh, okay. Nice. Guess we'll do some gold, oil, and Bitcoin. Looks like it's deciding to go up. Okay, another example of trapping. It's probably OPEC. OPEC didn't do more than expected, which was unexpected. They did what it was expected, so that was unexpected. So what's your next move, son? What do you think? You going to grab the pullback? Or is 90 the number? Notice that we just tickled 90. Is that the number? Cool. Natty on the rise. Okay. Yeah, I can't trade it though. It's disabled. Too bad. It's nice to watch with Russia. And gold. Wow. Kind of underwhelming compared to everything else, huh? Look how you got to zoom in to find anything. Okay, so you probably want to trap it. If you got to trade, yo, I'll trap it. Okay. So like while it was falling, you should have marked the high, marked your entry level. And remember, you got two places as a bull, assuming you're a bull here. To buy, you could buy off this bottom of the trap, or you can buy after a breach pullback of the trap. Okay, so you have to make your decision. Are you a bull? And if you're a bull, you either buy here, plan A, or buy here, plan B. So either way, you're going to buy. Okay, and either way, you buy at support, because by definition, buying here would be at support. Let's do this in a color you can see better. Okay, that is support, but this is support, right? Not on the breach, but instead, if this comes up, then this comes back, and then this goes up. Now that's support. It used to be resistance. It's now support. So when I say things like roll reversal, that is what I mean. It used to be resistance. Now it's support. So either way, because remember, bulls buy what? Bulls buy at double bottoms or, right, support, which are higher lows. So this is a higher low, and this would be a higher low, assuming this first one makes a higher high, which is just another form of this. The only thing is you'll probably do it on a smaller time frame. Like you might catch one on like a 15-minute chart. So it does this. It goes boop, 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 right? And then later it'll probably do this. Okay, statistically speaking, this is still a bearish downtrend. How can I tell? Okay, well, up here, price was somewhere between 1 and 2 standard deviations above a mean when the slope of the mean was negative. Down here, price was somewhere between -1 and -2. standard deviations below the mean when the mean had a negative slope. So what do you do here? Probably nothing, actually, but whatever. If you're doing price action, you're doing price action. What you're planning with price action is that we're going to go this way. So I have a little tool for that. Insert indicators, custom channels. This is part of metatraders.com. You plop that in, and now what? Well, hopefully you can see. Okay, it's got a really medium and short term trends. Okay, but you can see one here. You can see here. So it's measuring a different, and one here. So it's measuring a different data set. But what it's saying is M is greater than 0 in the longer term. So anyone measuring it that way is going to say, well, this market is actually technically more bullish than bearish. That's their conclusion. Statistically speaking, this is more up than down. So buying near the bottom would be buying one standard deviation below the mean when M is greater than 0. So you kind of want to buy it. And now what is it doing? Well, it's doing what price action does. Up, 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 down, down, buy. Up, 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 down, down, buy. And it's getting back to the mean. And at some point, it's going to be way up here, right? Well above the mean. Okay. So what do you think? You're like, well, Wayne, which one is it? Well, if you're looking for your charts to tell you bullish or bearish, you don't understand the game. I want you to think about that. If you think your charts are going to tell you bullish or bearish, you don't understand the game. You're not even playing the game right. You don't quite get it. Okay? Cool. So it depends on the data set that you're measuring. And that can be subjective. Just change the time frame and it goes from bullish to bearish. So this is bullish, that's bearish. This is 4 hour, this is 1 hour. So the next thing an amateur will ask me, which one's right? Dude, they're both right. Statistics don't lie. They can be misinterpreted for sure, but math is math. The math ain't wrong. Okay? So on this time frame it's bullish, on this time it's bearish, and they're both correct. Cool. So you'll have to make some decisions. Oh, I know. But you can see if you're working on this time frame, which is a larger data set, because these are 4 hour candles, not 1 hour candles. So let me zoom in a little bit so you can see it. So a bull here would say the slope of the mean is greater, M is greater than 0. So you're a bull. And this is 2 standard deviations, okay, below the M. And you're like, but M is up. Okay, great. So it might be a buying opportunity. It might be, we don't know. So you zoom in even more. And at some point, we would have been back down here. At some point, you're like, my 4 hour says I should be RWA, ready, willing, and able to engage. So when do I engage? Consolidation, 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 consolidation. High. What do you do next? High or low? Gone. Gone. Right? Gone, dude. Gone. Okay? So now you got one. Now you zip into a more medium term, more conservative time frame. So you got one low. Because remember, your first one should be as low as possible. And then what? Up, 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 down, down, buy, 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 up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, up, down, buy. Was that helpful? Are you loving it or not? Let me throw an ad here because I want YouTube to promote this channel. So maybe I'm not making them enough money. So I thought I'd throw some ads. So bear with me here. Cool. Anyways, you love it. Have you joined FX Bootcamp yet? Change your life. You want the Dow? Well, I'm killing it. I bought everything. So most of you guys know I saved money since I think Omicron hit. So early October, November. I saved money. Why did I save money? Because I anticipated the stock market crashing 10 to 20%. I even talked about it in the summer, though, which is interesting. But nonetheless, I saved money. I had a big pile of cash. A gross amount of cash. Stock market dropped. NASDAQ dropped 20%. I think S&P 500 dropped about 15%. And then the day before the Fed meeting, I bought everything. I bought everything. Everything there is. All of it. Yeah. Everything's up, baby. Everything's up. So I can't get updated data because the market's not open yet. But everything, man, dude, everything. It's all up. Okay. Yeah. It's all up. And there's some more good earnings that came out in the last 24 hours, so it's likely to be up again. Isn't it nice to be able to talk even about the stock market and have a calm and cool and collected thought process so that you can prepare months in advance and then execute exactly when you wanted? It's a better form of trading and investing, huh? Well, it's not well done, but again, thank you. I'm working on accepting compliments. But I always have trouble accepting those types of compliments because I'm not saying I'm good. I'm not saying I'm smart. I'm not saying I'm the best. I'm not saying any of that. What I'm saying is that there's a level of understanding and comprehension about the market that can be obtained. So if you knew, you would do the same. That's all. That's all, right? So there's nothing special about me. There's a level of comprehension that can be obtained. And I was self-taught, so it took me a long time. But if, you would have a much bigger head start, so to speak. All right, well, thank you. All right, then you have to buy me a Manhattan and a cigar then, White Rock. That's I'm like, really? Okay, I'll accept that. Yeah. Yeah, Harvey, that's an interesting point, right? Trading in the zone, meaning like you sit down at your desk, you boot up your computer, you log into your charts, and then you go find a trade. It's amateur, isn't it? What are we doing now, fellas? Are we selling the dollar today? Like, oh, it reeks, doesn't it? Yes, I am saying I'm incredibly beautiful, amazingly modest. Although I'm wearing a green sweater with a deep V, and is that paisley? Yeah, yeah, and you know, gay tendencies. Yeah, don't forget, I lived in San Francisco for many years. Mm-hmm. All right, so anyways, thinking about that on gold, if you want to own gold. But look, dollar probably weakened for a while. Cool. And Bitcoin is still in the sell zone. It's okay, man. It's in the sell zone, though. Bitcoin, So I'm worried about some dollar strength. Oh, yeah, it's Metro. Yeah, I think in the swing trading group, while people are logging in, I was playing a Coldplay concert. And I think it was you, Johnny, right, that made a millennial comment. You're like, about the guys. You're like, look at those guys, those millennial guys. And I'm like, wait, those are guys. Like, look at the chicks at this Coldplay concert. They're ugly. You're like, no, those are guys. Oh, Metro. Oh, okay. I feel bad for the ladies. All right. So anyways, dollar's coming down. Yep. Dollar's coming down. Aussie stable. Kiwi stable. CAD getting crushed. But still doing better than dollar, right? US dollar, and then Japanese yen, kind of okay. Yeah, Low is good actually because he speaks. I mean, he's intelligent, but he speaks in plain language, not because he's stupid, but maybe because he's smart. But I like his press conferences because, like, I remember the time when he's like, he says, "I see that the market's pricing in rate hikes," and he's like, I have no idea why they're doing that. Which I love it, right? Like that's candid, isn't it? He's like, I see it. And he's like, I don't know where they're getting this. I don't know what they're doing, but they're totally wrong. And it's amazing for a central banker to say, these guys are totally wrong. They're pricing in rate hikes. And then, I mean, literally, he said, I don't understand why they're doing it. We're not raising interest rates this year. We're not raising interest rates next year. And we're probably not going to raise interest rates the year after. And then he says, let me tell you when we're going to raise interest rates. When wage growth is above 3%. And you're like, holy smokes, he just told half the hedge fund managers in the world that they're betting wrong. And then he just told them the formula to figure out how to bet next time. And by the way, the RBA has done that many, many, many times. Governor Stevens, before Lowe, Governor Stevens came out one time and literally told the market that they overvalued the Aussie dollar by something like 1,300 pips. When was the last time someone gave you 1,000 pip trade? And I'm telling you, I crushed that because I forget what it was, right? It was something like, let's say it was 97 and at a press conference, he said, yeah, well, I think it's worth more like 85. Like it was just crazy. So it dropped 1,200 pips, right? Just like crazy. It was so wonderful that he just literally told us, because remember, he can do it by adjusting monetary policy, which is open market operations, and it costs money to do that. Instead, he just came out and said, yeah, we believe it's overvalued by 1,200 pips. Boom, sell the Aussie. Just sell it, sell everything. And that particular year, because then 6 months later, we were at like 83 or 85 or something. And then he said, yeah, I think it's worth 78. Boom. Hundreds of pips down again. That particular year, I sold Aussie more than I had probably ever had. And I remember I was struggling to find currencies to buy against the Aussie because I'm selling the Aussie, so I need to buy something. And I was in everything, a lot. So I had pound, I had dollar, I had Kiwi, I had this and that, just anything that I could put an Aussie on, right? So I'm scrolling through, is there Aussie Mexican peso? Like, dude, I don't know what else to sell it against. And it was great. It was just a great, year and a half of just like wake up in the morning and drop the bomb on Aussie. It was crazy. So Australia has a history of that. Also, I remember after the financial crisis, first world sob story. I'm driving around New York in a limousine. I know it sounds so sad, right? But it was during the worst of the financial crisis, and I think I just landed there. I don't know. So I think we were in Queens. So I don't know if that's LaGuardia or JFK or whatever. But anyway, so I'm in a limo in Queens at like 4:30 in the morning. Heading into Manhattan, and because I'm a baller, I'm listening to Bloomberg in the back of the car when that was an amazing feat, and they were discussing the interesting trend at the RBA at the time where they would raise interest rates, pause, raise interest rates, pause, raise interest rates, pause, raise interest rates, pause. Okay. And that it was a logical pattern. And that was awesome too, because you could plan and say, well, they're going to raise this meeting, not raise the next meeting, then raise and then not raise, and then raise and then not raise. And it just created a great pattern. In a way, if you think about game theory, it's signaling that you can very much anticipate the next move of the player. So, if you buy here, then they're going to do this, and then you can buy there, and then they'll do this. And you know the counter move ahead of time, which was just so wonderful of the RBA. And other central banks seem to be guessing. As they go along, they're like, I don't know, 50 basis points? And then the next meeting, 25? And then the next meeting, none? And then the fourth meeting, 50 basis points again? You're like, wait, what happened to this pattern? And it seemed like they were making it up as they went, but it seemed like the RBA always told you well in advance. So again, think about this. The head of a central bank that controls the value of a currency says, everybody placing bets right now are wrong. Then he says the exact condition for which they will raise interest rates again. So he actually gives you the formula. Think about that. Dude, it's like free money. I've told you this story 15 times, but I don't know if you get it. Like, they're giving you free money if you translate that into trading. You know that when they're not, and then you know when they will. So like, oh my God. Okay. How lovely. Okay. Hang on. Window, tile. There we go. Cool. The problem is the Fed's going to give you free money, which means in 50 years the dollar's going to be worthless. It'll be free. Hey, do you want this dollar? I have nothing to do, right? Right? You're like, wait, money's free? Yeah, you know, money's free. Look at all this money, right? And then you're like, hey man, you can have this money pretty soon. Have you seen the toilet paper that's got $100 bills printed on it? I think that's funny, right? But will you still love the smell of money if it's worthless? Oh. Will you still love it? You're like, nah. Worthless. Confetti. And then you're like, yeah, I don't even like the smell anymore. It smells terrible. I want to get rid of it. Cool. Peso. Oh, my peso. Look at that peso. Sell it off 21. It's been working really well. Okay. So you got to have your lines. What? Got to have your lines. Okay, you might trap it there. You could even do sort of a trap there. Okay, because, or maybe I'll draw it here. Let me do it here. Hang on. Okay. So anyways, I don't know. There's some sort of form of this might happen. But, okay, so like, what do we know and then what might happen? Michael says, I guess that part I don't get is this. I guess that part that I don't get is, isn't Powell doing that too? Yes. But people are not doing the work. But then again, like, how many people just don't know that Governor Lowe has told us the exact formula on how to make money trading the Aussie dollar? Most. There may be very, very few people. Now, I got it because I didn't read the newspaper. I didn't read a magazine. I didn't read a blog post. I didn't watch a YouTube guru. I didn't watch Bloomberg. I didn't watch CNBC. I didn't read The Economist. I actually listened to Governor Lowe in a press conference, and I heard him say it. So if I'm sitting on a yacht and I name it FU, what's the name of your yacht? FU. No, seriously, what's the name of your yacht? FU. and I'm laying on the front deck, and I got gold chains all over me, right? And I'm drinking Dom Perignon out of the bottle. And everyone's looking at me like, look at that guy. He's gross. I'm like, F you. I earned it. Okay? I earned it. I can sleep at night. Screw you. F you. You guys remember the guy, what's that file sharing service? Box, File Box. What am I thinking? one of the original Dropbox. You guys remember the guy from Dropbox? Okay, he's a scumbag, and a lot of it was used for bad things. And so anyways, he was kicked out of everywhere. But it turns out, Dropbox. So that guy is a scumbag, right? Is used by drug dealers and criminals and terrorists. So eventually he's on the run. And he goes to Hong Kong for a while, and then he's on the run again because extradition and stuff. Turns out, by the way, if you give New Zealand money, and I think it's $3 million, you get a passport and a citizenship. Boom. So he's like, okay, well, so he left America, then he went somewhere else. He was in Europe. Then he left Europe and he went to Hong Kong. Then he left Hong Kong. Finally gets to New Zealand. Now he's a citizen. He can live there regularly, right? So he buys like a $30 million house in one of the best neighborhoods of New Zealand, obviously, if it's a $30 million house, right? And imagine all the other neighbors are $30 million house neighbors. But they're quiet, conservative New Zealanders. And this guy's like throwing massive parties with cocaine and prostitutes. And he's driving around in loud cars. And he doesn't care about the neighbors and stuff. And it's funny because he's just like, that was his attitude to his neighbors. Like, screw you, F you, right? Call the cops. I don't give a crap. And he's just driving around and he's burning donuts in the cul-de-sac and stuff and in his Lambos. And his license plate, I forget what it was, but it was something funny like that, like F you. And that's how he rolled. He's like, screw you, man. I got $1 billion. F you. It was just funny. Just funny. So anyways, if you earned it, you deserved it. How do you earn it? You do the work, man. Why did you make that trade? Jim Cramer told me. Oh, well then Jim Cramer deserves a lot of money. Do you know what Jim Cramer did before working at Goldman Sachs? He was homeless. Don't post it, Darko. Make people do the work. Did you guys know that? Jim Cramer was homeless. He lived in a car for a long time, and then he lost the car. So he lived in his sister's apartment, sleeping in the corner on the floor until she kicked him out. But he said the most important thing he did with the little bit of money he had, every month he'd put $50 into a mutual fund. Or as much money as he could. I can't remember the exacts of the story. But he was homeless for like a couple of years. So if you caught my live stream yesterday, I showed you the exact spot on earth I stood when I said, I want to change my life. I want to see the world. I want to be a big businessman. I want to do something. And less than 5 years later, I'm sitting on a board of directors with George Soros in New York City on Wall Street. And you're like, that's an inconceivable story. I know it happened to me. I was there. And let me tell you, that place was a dump. Where I was standing, there was no opportunity, no drive to change the world or even see the world. If I told somebody in that town that I wanted to see Paris, they would look at me strange, like, why the hell would you want to go to Paris? I want to go to New York City and be a big businessman. New York is dangerous and dirty and ugly. And why would you want to go there? I'd rather die than go to New York City. I'm like, really? That's interesting. So 5 years later, I leave that place. And not only, I'm not a tourist, man. I was so excited. I was taking a subway to Wall Street. And I'm going to a board meeting. In a skyscraper, in a powerful law firm, Shirling and Sterling, right? I'm like, amazing. Going from that little spot in that dump of a town. Okay? But think of Jim Cramer, homeless for years, turns his life around, gets hired by Goldman Sachs, produces, and makes his way all the way up to vice president. He might have been an MD as well. I'm not sure. I don't think he made it to managing director, but you can turn your life around. You'd be shocked how radical change can be. Doesn't Elon Musk have a saying like that? Like you take your 10-year plan and instead do it in 6 months? How did he get to Goldman Sachs? I don't know. I didn't read his book. So maybe if I start a book club, we can read his book. But the point is, very often I think you need to break your mindset of what can be achieved. Okay? Humans overestimate the short term and underestimate the long term. Did you guys catch that live stream I did maybe 2 weeks ago? Somebody logged in. They're like, Wayne, how do you become a millionaire? And I lined it out. How you can be guaranteed to make millions of dollars if you invest and spend and invest your money properly over the course of 30 years. You know what the interesting part is? That person won't listen to me. I would be shocked if that person gave a damn about what I said. But it's true. Guaranteed millions of dollars. People don't do it. Well, some people do it and they're fabulously wealthy. And by fabulously wealthy, well, to die, with a full belly, I suppose, and sleeping on a Tempur-Pedic, that's a pretty good end. Can you imagine if you're entrepreneurial, but you were born in Afghanistan? So right now you're hustling and you're buying a bunch of turnips. You got a good deal on turnips yesterday. You negotiated a fantastic deal. You got a whole truckload of turnips and you paid hardly anything for it relative to what it's worth. And so now you're going to go to the market. Hopefully there's security today. And you're going to sell your turnips and you're going to work 18 hours and you're going to sell some turnips. And at the end of it, maybe you'll have $10 US profit. Imagine that guy. That guy might have to work harder than you, but he doesn't have this opportunity in front of him. A credit card is how it's made. Yeah, there's so many things we can do in the book club. Like I thought we could read, the biographies of some of the biggest traders ever. Like, I don't know, if there must be a book about Paul Tudor Jones and stuff. Right. I want to read some real estate stuff, some stock trading stuff, some Forex stuff, some trader psychology stuff. I want to read, I've already read much of, but I haven't actually read all of the classic classics, meaning go to like Machiavelli and Rousseau and Locke, Smith. I still have it right there. It sits right above my desk. Did you guys know that? You see this? Okay. This is museum quality. The pages haven't even been opened. So I'll just barely open this thing. It's beautiful, if you see the quality. It's beautiful, right? Again, I don't even want to... The pages haven't even been opened. And this was printed... doesn't, maybe the next page has the date. Copyright 1909. Now this is part of what's called, let's do it this way. This is really cool if you're into stuff. This is called the Harvard Classic 5-foot shelf of books. This one is Wealth of Nations, Adam Smith. This is first edition, museum quality. And it's a 5-foot shelf of books. Not just, obviously, this is business and economics related, but the idea, so President Eliot was the president of Harvard at the time, said that you can make an educated, you can make a Harvard man in just 5 feet of books on your bookshelf. So the publisher from New York said, really? Which books? We'll publish them. Okay. And by the way, Eliot House is a cool house. Oops. Where am I? I'm over here. Sorry about that. So Eliot House is one of the river houses, and it's right next to Winthrop and behind Kirkland. Kirkland House is the house that Zuckerberg, right? That Zuckerberg was in and invented Facebook while he was at Harvard. So you have Kirkland, but it's kind of weird. Like you kind of come around a little cul-de-sac, and that's Eliot House. So anyways, so President Eliot was responsible for that. So the interesting thing is, book one is Benjamin Franklin's writing. Now you might think about Franklin being a founding father. Franklin, the guy flying the kite with a key. Now think about it, dude. He must have been interesting, right? If he's flying a kite with a key, dude, this guy is interesting, right? Well, he was also the ambassador to France. Because remember, they hated the English, so he was the ambassador to France, and he's the guy that created daylight savings times and stuff. Like, dude, he's an interesting dude. So that's where it starts, and then it goes to Plato and Marcus Aurelius. So I can actually, book two, I could probably pull that Marcus Aurelius quote. So you can actually read the writings of Marcus Aurelius. But, of course, our book club doesn't need to go into that. We would keep it to specifically investing and trading. So, for example, you would read Rousseau, which I'm sure is one of these books somewhere. Rousseau was the guy that came up with the concept of rent and how to mathematically calculate the rent. So if you're a real estate person and you don't know Rousseau and you haven't reflected on how all these prices come to be, maybe you're inadequate. You'll just be rich. Milo says Paul Tudor Jones mentions that he also uses stops. Of course. Yeah. I mean, Milos, that's a universal truth. So like when you come across somebody that doesn't like fundamentals, they don't believe in fundamentals. They don't believe in things like seasonality. They don't believe in things like trader psychology. They don't believe in like stop losses. There's all kinds of things you'll hear from YouTube gurus, for example. And it's very dangerous stuff because they really don't know what they're doing. And what they're telling you is they don't understand these things. So they'll say everything's in the price. Dude, price is important. Yes. But I can tell you when it's going to change directions before it's in the price. How many people here have seen me do it where I say at this period of time on this day or in this week, on a particular week, everything you see here is going to change? Has anyone seen me do it? I'm like, it's not on the chart. It's not in the price actions. It's not here. It's not there. But this is what I think is about to happen. Yeah. So all I'm saying is then everything in the price is generally true, but not always. So if someone says to you, you don't need to know all of that fundamental mumbo jumbo, it's all in the price. What they're telling you is they don't understand. Yeah, months in advance. Why? Well, why couldn't you, right? So anyway, so be very careful. If someone says they don't use stop losses, there's so many things that they obviously don't know how to do that you should just very clearly and very quickly stop listening to them. They're most likely sloppy with their entries. They're most likely or very poor with fundamental direction of market. If you have large stop losses, it's because you don't understand things like price action. And you have zero risk management. I mean, there's so many things wrong with that idea that, you know, it's sort of like an amateur home builder. They don't even watch YouTube videos, yet alone go through an apprentice process. They really don't know what they're doing. So they get and they build a lousy foundation, and then they build lousy framing with really bad physics going. Clearly load-bearing stuff's not built correctly, but they put it all together, and then they bring in the sheetrock guys and the painters. So when someone comes up and looks at the house, they're like, well, it looks nice enough. But then one storm or, 3 years down the line, a wall falls down, a window falls out, cracks everywhere. And then a natural disaster just blows the whole house down. Or maybe a big bad wolf. The whole house falls down. Because, well, you can't see it, but it's just wrong. Okay? And you're like, oh, you don't need to know physics to build a house. Yes, you do. Yes, you do need to know physics. And physics and building homes have been well understood for hundreds, if not thousands of years. So why would some idiot come along and say, you don't need to know this stuff? Some wood, some nails, knock it together, slap some paint on it, and you're golden. No, Okay. So be very, very careful of someone that is not inquisitive enough about the art and business that they do to be interested in learning everything. Okay? If people put 1/10 the energy into their trading as they put into football, they'd be significantly better, right? Well, no, Michael, it's more like he plans his trades. So one key theme I talk about all the time in the swing trading group and in the day trading group is not about being right, because that's easy. We have some very basic and clear rules of engagement. Being right is not difficult. But to be smart enough and confident enough to know exactly when you're wrong and then get out is so much more important. So, like, for example, if I place a trade based on my technical and fundamental analysis and it works out, I'm not surprised. Right? You understand that? If I place a trade and it works out, I'm not surprised. I planned it technically and fundamentally. Why would I be surprised? I made the trade because I'm going to make money. So isn't it more interesting and even more difficult to know when to get out of a trade? Not specifically a trade, but how about like when my thesis, the basis of my trades has changed. The market conditions have changed. Are you strong enough and confident enough to exit? Because you would have to say to yourself, you either were wrong or things have changed. And what you'll find is your losing trades should be significantly more interesting and informative than your winning trades because, well, you were supposed to win. That's why you took your trade. Like, there should be nothing surprising about it. You should be shocked when you lose money. You're like, holy crap, what the hell happened there? Okay? And that's where you need to be. Okay? Okay? So breaking this trap is a dangerous place, guys. That's why I trapped it for you. Oh. Maybe some dollar strength going on here. Oh. It's all right. I have 200 pips locked in. I'm cool. All right, so I think we'll leave it at that. Did I do okay? May I place one more ad, please? Again, I throw those down. I'm hoping that incentivizes YouTube. And their algorithm says, oh, they're serving ads. Maybe we'll promote this. I'm not sure why the kids get promoted and this channel doesn't. But anyways, big change here, big change. Remember, this is why you trap things. Try to figure out what's going to happen next. So I'd like to wish you a wonderful day. Peace on earth. May the pips be with you. May your profits be above average. If you're in my day trading group, I will see you tonight at 7 p.m. for the Asia Open. You will see Ryan at 2 a.m. for the European Open, the pre-European Open. Remember, we like to plan our trades before it starts. And if you ain't in one of those, I invite you to visit fxbootcamp.com. It's $88 base price for an entire year for the access to the videos. 65 hours of videos. But then, of course, you can upgrade your account to join the swing trading group, and that's only $99 a month. Totally worth it, man. So I'll see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average.